you better find middle ground or it's going to be a freaking brutal bloodbath where we're all just going to sit there and crush each other. It's inevitable that all roads are leading to this, probably 18 to 24 months away before the markets are kind of breaking from real economic pain. It makes me sick to my stomach. I think it's literally like a 65%, 75% probability type thing. If rates go out too much or they decide to print money, gold's going to win, Bitcoin's going to win. All models will be broken, as Saylor says. Like, yeah, this will be game on in Bitcoin and gold like you can't believe. Like, you've seen nothing yet. It's Gresham's law, and it kicks in ultimately when people run to the soundest form of money. When that happens, you're not going to want to be in it. But I think the only wrong answer is to have 0% allocation to the space, that everyone should have. And I think it's kind of predicting somewhere out and beyond 2030, you'd be over $1 million a coin.
It feels like people are on the verge of capitulating. People are on the verge of just puking things out, and people just can't take it anymore, right? Like there's the Bitcoin treasury companies, Bitcoin price, stocks, like all these different things that are happening in the world. Obviously gold price has been up and has been really ripping. Silver has too. But I would just love your thoughts on you see so much. Obviously you've been in the markets, 30 plus years. And you have so much knowledge in this area and what you guys are doing with the Bitcoin Opportunity Fund. I would just love your download on just kind of what you're seeing and maybe helping people calm down a little bit and just seeing the signal within the noise a little bit.
Yeah, boy, it's a tough question for me to ask, but again, thanks for having me with you. And then, look, I think there's a lot going on, right? I mean, it's a noisy world, obviously, given some of the stuff going on with Charlie Kirk in the last week. You can almost feel the political divides kicking up again, right? The polarization, the reminder that we are still polarized, that people aren't, necessarily having kumbaya yet. What we would call fourth turning stuff. So I'd say let's talk that quickly. I think that the actions of the last week, kind of like Larry and I were actually kicking this around, James and I too, of it kind of reminds me of the 1960s a little bit. Just the political divides and people in different corners. And so I think that you have some of that social stuff going on and a reminder of just, it's amazing some of the statistics you're seeing out there of surveys of people saying, well, it can be justified political terrorism. And I mean, to me, that's crazy. But like, I kind of, this reminds us of fourth turning stuff of broken money and, in a system where people then have lost morality and don't understand kind of the basics, and they're frustrated and they're angry. And the internet, as Balaji talks about, the internet's kind of what broke the system in the way that, again, you have talked before about is that Larry talks about the broken money, which I totally agree with. From 71 on, we went off the gold standard and it's been inflation since. And then secondly, as Balaji points out, the internet broke kind of media that forced the people to go to the far right or the far left to sell advertisements. And so that's created this noise outside. Now, interestingly, the markets are not reacting to that. Like, I think that, right now the stock market's at nearing its all-time price to earnings multiple high of March 2000. It's probably about 7-8% below that. Earnings are growing 9 to 13% projected over the next few years. AI is a thing that people think is a game changer, and we'll have to see how much of that is premature or how much of it will be truly game changing. The markets are choosing to be optimistic. I see in the bond market, it's pretty contained. I see 30-year treasuries starting to increase in terms of interest rates in a lot of different markets, whether it's US, Europe, Asia. I don't get overly concerned with that in the sense that those are small markets, right? I mean, 83% of all US treasuries issued are all on T-bills now because that's all people will buy. No one buys the long end. So I'm not sure what signal 30-year treasury moves in the world are really telling on anything, to be honest. I don't know what to make of it. It's a question in my own head. But I think that bond markets, the 10-year treasury is what I'm looking at. And for the most part, that's kind of within a range. It's just range bound. It's not breaking out and breaking down yet. I'm not seeing any negative signals coming from the bond markets then, so to speak. I do see a corporate bond market that's overbought, just like the equity markets are near their March 2000 highs in terms of price earnings multiple. I think that the credit spreads on corporate junk bonds and investment grade bonds are near their all-time tights. I think one of the tightest moments was 1997. They are approaching that in terms of the spread over US treasuries. That's a sign of people are cavalier toward risk when spreads are tight. So that market's telling you, just like the equity markets, like party on, Garth. And then we look at gold and silver, and those are absolutely breaking out. Those are in the middle of a massive bull market, and the gold miners and silver miners now are performing really well. Those are some of the best performing assets in the world this year, gold and silver bullion, and now the gold and silver miners as well. Bitcoin, I agree with something you were saying earlier, and James and I were talking about this. Like it's certainly an antsy crowd in Bitcoin Twitter sphere, right? Everyone's a little aggro. We got the op return people and the knots people fighting with each other. You got people watching Bitcoin treasury companies that massively went up come crashing back down, and they are crashing, many of them. And you get kind of this whole agita of why isn't Bitcoin moving faster? Why isn't it keeping up with gold? So when I step back from that around the world, look, I think gold is telling you something. I think what gold is telling you is that the big beautiful bill, if you notice, gold really took off when the big beautiful bill showed that the deficits are only going to increase. In other words, they have no choice. They've got to spend. And secondly, when Doge showed you that maybe it's somewhere between, call it 90 to $200 billion is really the max they can save. And Musk ran back to Tesla, kind of threw in the white towel a little bit, sort of. I mean, he was going back to protect his own company, I think, because the stock was getting hit. He needs to sell cars in Europe. But, I think that you could see kind of a little surrender on Doge. They really can't go after defense and mandatory spending like Social Security and healthcare. So I think that Doge thing and the big beautiful bill combined with big beautiful bill deficits combined with now the dovish Fed, right? That you're going to see Trump's going to get Moran approved today in the Senate. He has another seat, I believe, coming up in January at the Fed, and then obviously Powell in May of 26 is going to be replaced. I think that the markets are predicting that the Fed is going to have like a fox in the hen house, just with the Treasury running the show at the Fed. And I think Bessent and others have been clear that they need, and Moran has been clear on this too, per the Mar-a-Lago Accord, you gotta have the dollar decline to rebuild America. You got to inflate your way out of this debt problem. And I think that's what gold is signaling. Good news for Bitcoin, and Bitcoin's a conundrum. I think that there's been a lot of paper Bitcoin issuance, right? Even in the form of treasury companies or in derivatives or levered companies offshore that are doing long short strategies in the space. And so Bitcoin eventually, the good news is it catches up with gold, right? In the short run, it can be volatile with markets, as you saw in April. It can have a lot of levered players, but over time, it catches up with gold. It's digital sound money, is how we see it. So I'm unfazed. And just one last point on the Bitcoin treasury companies, I'm sure we can get into it later, but I think a lot of those kind of got a little bit overbought. They were overzealous in terms of market valuations. But if you believe Bitcoin is going higher like we do over the next several years, and if you do believe that they deserve to trade at some premium to book value or MNAV, which I do, I think it's simply a debate on reasonable minds can disagree on what the right proper price to book value is, as I call it. Like JP Morgan trades at 2.4 times book value right now. Why? Because it can take those book value of assets and turn into a stream of earnings. Historically, JP Morgan's traded around 1.2 to 2.4 area, so call it 1.75, 1.8 on average. Like I think a lot of companies like MicroStrategy will end up settling in at that multiple of like 1.8 times on average, and it's trading at 1.46, I think, MNAV today. And so I think that if you believe Bitcoin price is going higher, the book value is going to grow. And if you think the multiples are going to expand back a little bit, there's a lot of interesting plays here in the Bitcoin treasury space right now. But yeah, you're right. There's a lot of agita out there in Bitcoin. So that was a little long-winded around the world, but that's kind of as I see asset classes and dashboards, how I'm thinking about it. And we can get into kind of, I think, direction of where things will head over time of how I think the probabilities are playing there.
The world is changing. Privacy, sovereignty, and freedom are no longer optional. They are essential. If you are still holding your Bitcoin on an exchange, you are vulnerable to your Bitcoin being frozen or the Bitcoin not even being there. In a world of broken trust, a fallen world, we need to be able to know through code, through math, that we have the keys to our wealth. We don't need to trust some third party. We don't need to trust some government. We don't need to trust some ruler on high that they're going to have our wealth and not censor it from us. Just ask European Union how that's going right now. And that's why at Foundation, they're building Bitcoin tools that are open source, privacy first, and actually simple to use. It's the only kind of Bitcoin crypto tools you should be using. The Passport Core is a Bitcoin-only hardware wallet, probably made in the USA. The only one that I know of, fully air-gapped, no Wi-Fi or Bluetooth to compromise your keys, with a large screen, seamless QR workflows, and encrypted micro SD backups. It is here for the average person or the advanced cryptographer as well. Along with your purchase, you get the attachments, the USB-C cord, the iOS and Android attachments, micro SD card, and the USB-C cable. You don't have to go searching around for everything. You also get the free Envoy mobile app as well. You can buy Bitcoin straight into your self-custody. It helps you set up your Passport Core, label and track your coins, manage your keys, and do so much more. Foundation built the core and their company for sovereignty and freedom for all of humanity. You can take back control of your money and your digital life now. Get started today at foundation.xyz/Brandon, foundation.xyz/BRANDON, or check the link in the description. I mean, what are your thoughts on just the Bitcoin 4-year cycle in general? I mean, I know there's a lot of just back and forth of, it's going to be just a stair step, up slowly, just kind of grind higher over time, no more 4-year cycle. Oh, they're going to have a super cycle. Oh no, there's going to be a regular, 4-year cycle. And it's, maybe 120, 100, maybe it goes up to 130, 150. And then we have a correction next year and it starts, like what do you see when you kind of look out across the horizon? I guess over the next year, but also the next, coming years when it pertains to the cycles.
Yeah, I think that, there's some great dashboards out there and models that are worth studying and some great database services out there that track these. And like power law is the one that kind of always resonates with me, the power law theory, right? The concept of, the log of time on one axis and log of price on the other. And if it's a network effect and growth, well, then it's growing in line with Metcalfe's law and a network effect, and therefore it should trade close to that median line of power law. Well, power law I think says today it should be at 127,000 per price Bitcoin, and out in April, as I recall, the median would say, doing this from memory, it's like over 150,000 Bitcoin price. So and I think it's kind of predicting somewhere out and beyond 2030, you'd be over $1 million a coin. Like that one makes sense to me, but I like everything. Like you got to respect trends and you got to respect models and all people's viewpoints. I wonder if 4-year cycles though could be dampened now because of the institutional element here and the fact that there is ETFs. I mean, it's more institutionalized than it was 3-4 years ago, for instance, Bitcoin, right, with the ETFs. And so like, I wonder if that dampens some of the volatility. Secondly, we haven't even broken above the median in this upcycle of power law. Like usually you overshoot by a standard deviation or two. And we haven't seen that. Now maybe we won't. I mean, it's possible. I mean, it's possible that that's it. But what I struggle with in my head, and to answer your question on trying to predict probabilities of where things are going, I'm caught up in that dovish Fed factor. I'm caught up in the Clarity Act that will probably be approved by Congress this Q4, that will give institutions the ability and commodity funds the ability to have CYA to buy into this commodity asset class of Bitcoin. The dovish Fed, I think, is a big deal as another catalyst. And then I think there's this global overarching trend of the next handful to 10 years of, look at the BRICS. I mean, they are absolutely setting up a network for gold to be the collateral reserve asset, right? I mean, historically, the US dollar has been global reserve currency, but to me, that's important, but it's really a global reserve asset. The fact that a China businessman that sells product to Walmart in America and gets dollars back from Walmart, they turned around generally and would match their assets and liabilities by buying U.S. treasuries, to oversimplify. Yeah. Well, they're not doing that. They're buying gold. And the Shanghai Gold Exchange that was set up, that now is being opened up to be, set up outpost, if you will, of the Shanghai Gold Exchange in Hong Kong and Saudi Arabia. They're setting up a network for this to be the global reserve asset, gold. That's interesting to me. Why? They see what we all see, that Bitcoiners see, that the global debt problem is real. And I think it's just a matter of time that gold will zoom like it is now, based on those Eastern central banks buying more gold to set up for that BRICS type of currency network exchange of gold being the final settlement layer, because the Saudis and the Indians don't trust China and vice versa. Like ultimately, they don't want to take yuan back or yuan treasuries. They want to just have
Yeah.
gold. And so gold's become the settlement layer in the BRICS. The US is going to have to be a part of that, by the way. That's why you're seeing the London exchanges of gold being drawn down in the first half of this year, where JP Morgan brought $4.8 billion worth of gold back to New York from London in Q1. Well, why is that? Because I think people realize you got to have gold to trade in this world. That's going to be your settlement layer. And so I think that there's things going on there. I think Bitcoin will join gold because there's only two non-counterparty monies in the world that no one controls. It's gold and Bitcoin. Gold supply grows with population growth at 1.8% a year on average, which is why gold has been a store of value for at least 2,500 years, if not 3,000 years beyond. People have traced it back, but certainly you can trace it back to about 485 BC. And I think that Bitcoin is even more scarce than gold. Like gold is, think about it. I mean, gold is inflationary. Supply grows at 1.8% a year on average and can spike when prices spike. I'll assure you that gold supply will go up here over the next few years. We're seeing it. I will point out, I mean, gold is scarce. I mean, in the sense that for the last 11 years, the
Right.
CapEx expenditures into gold miners has been like nothing. They're not finding many gold projects in the world. They're largely in Africa, and there's risk there. So I do think you're going to see a stimulation now in price, and you'll see gold supply react to that. Probably supply pushing to 2% a year. Bitcoin's growing at less than 1% a year right now, and at the next halving, it'll grow at 45 basis points a year. It's capped at 21 million coins. Like it is the scarcest asset. As people understand what Bitcoin is, just simply digital gold, and it's the most decentralized network that won't change. And despite op return debates versus knots, that doesn't change Bitcoin supply or the network. That's not consensus. So I think that like the story of Bitcoin and gold is going to be with us for the next 5 to 10 years. It will have cycles, but so I'm being long winded. You asked about cycles, but I guess to answer your question, to summarize, I can see scenarios where it's not quite as volatile to the downside as you think. I can see scenarios though where there's a chance that it's peaking soon, but I don't buy it. I personally think we will shoot through the median because of that dovish Fed, because of this global higher backdrop vis-a-vis the BRICS and gold and sound money. And then tell me if something happens in the world as it relates to recession over the next 2 years, and then what kind of money printing happens from that. That will really catalyze things. So let me pause there, as that's a long-winded answer, but I think that's kind of where the thoughts in my brain go to.
Yeah, that's great. Do you think that things can, I don't know if blow up, I guess is the right way to say it, but just, Bitcoiners is always the meme of, it can melt your face off. Obviously you can have these spikes and all your models are gonna be broken and type of stuff. I mean, obviously there's, the bigger the asset gets, there's, like you said, the volatility will, at least theoretically, it should dampen, obviously, because there's more and more people holding the asset. At the same time, there's the finite nature, but you also have, shorts out there. You've got the futures, you've got all these different things. Could there be some type of price suppression, paper, Bitcoin, like those things are going to happen over time. And I think the difference with Bitcoin is the auditability every 10 minutes, right? Like that should, people would probably blow themselves up doing funny games for too long. Like you're going to have people, and that should hopefully correct the system. But at the same time, going the other way with it, do you think that those models can or will be broken because of that finite nature, where there is a self-correcting mechanism built in inherently, so price can really spike up? Because it feels like, again, all this, the last year, all we've had is good news. I mean, news that you would have, you got one piece of information, 10 years ago, 5 years ago, you would have been over the moon for months, and now it's just seemingly coming in every day. And it feels like, granted, price has gone up, it's doubled in the last year, or so, right about. So yes, I mean, there is that, but at the same time is, is there diminishing returns, and like, how do you see all that and just the potential for what could be happening going forward?
Yeah, I think, The answer is yes, 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 all the above. Like I think that volatility, meaning again, what I'm trying to point out is I'm not sure these 80% drawdowns are necessarily
Mm-hmm.
as high a probability as they are. Of course, it's a risk out there. It's a volatile asset class. What I do think is a risk is what you saw in April. Like you this is a levered space. There are speculators out here in New York hedge funds, for instance, that are levering this Bitcoin up and all of crypto. And if they're getting hammered in crypto, if that self corrects 50%, then I think that in crypto to me is like some interesting technologies there for sure, right? Like I don't I think some of those are interesting technologies, but none of them are stores of value, zero.
Mm-hmm.
And Bitcoin's the only one along with gold. Those are the only two non-counterparty monies. And so meaning, you can see kind of everything settling back in Bitcoin and gold ultimately in the world. And so I think what you saw in April though with 30% corrections type thing, like that's obviously going to happen. You're going to have these speculators that start getting killed in equities or crypto trades and therefore have to sell their Bitcoin down or their paper Bitcoin and there's price pressure. Um, but I think that, as I said, I think generally I think the probability is higher that we're in a bull market right now. Still, we will overshoot the 150,000 April power law theory, for instance, of price, median price, where you shoot to something like 150 to 180 would be my guess at some point next year, and it could take a little longer than you think. In my experience, where I in my like mistakes I've made investing a lot is can be really early by a year and a half, right? In other words, I thought oil
Yeah.
would rebound by 2019, 2020. And of course, COVID happened and the oil markets delayed more before they recovered. So, all right, either way, but the returns were still, the IRRs were still phenomenal if you were right by 21, 22, but it took longer than you thought. Like that's what Bitcoin reminds me of. Like, I know we're going to be right over 3 to 5 years. Like I have no idea over the next 18 months. Like markets will market, levered guys will get killed. There is risk in markets and the economy for sure. Like, you know what I mean? So like stuff can happen in the short run, but yeah, I mean, I think all models will be broken, as Saylor says, over time. I think over a decade he's right. Like meaning that people have no idea just how small this asset class it is. I mean, Bitcoin's not even a $2 trillion asset class, right? When you count all the lost coins out there, I mean, probably lost at least 3 to 3.5 million coins, and so like we're not really a $2 trillion asset class. It's smaller, and the fact that like 40% of like current holders are probably dug in for a while, despite some OGs selling here over the summer. Like it's still small. Like most people are holding here. I think what you're seeing is just natural chop. This reminds me of Bitcoin prior to last fall. As you recall, from like roughly March of 24 through October of 24, Bitcoin was sideways to down. It was a bull flag, and then the Trump catalyst catapulted us higher. I think we're entering one of those right now where we're going to be range bound for a bit. Eventually, gold and Bitcoin will always meet up over time. It could take 6 months. But like, yeah, I remain optimistic in the short run. I remain very optimistic over the long run, like 3 to 5, 10 years, because it's such a small asset class, because the global debt problem, the demographic problems that no one's talking
Mm-hmm.
about, the fact that people aren't having as many kids, the fact that we have this Social
Yep.
Security and Medicare balloon that is people drawing on the system. Like there's no doubt they're going to have to print money. Like you're going to see, and God bless us in the next recession, because like what I'm worried about most on the breaking models point is like I worry that the next great financial crisis it's not going to be banks. The banks right now are in pretty good shape. You'll have moments like Silicon Valley Bank where of course there's a run on the bank. That can be a problem. It's really, I think, more in the rates markets. If the credit markets begin to start blowing up globally and you see the 10-year treasuries, not the 30 years, but the 10-year treasuries, because everything in auto finance loans, home loans is based off of 10-year treasury rates. If that starts percolating up higher, that's when I think people are going to really panic, right? Because you're going to start seeing then sovereign questions on how big the deficits get. The MMT people will say, well, it's not that big of a deal. You can manage through it's just more interest expense. But it will reverberate into discounted cash flow analysis, and therefore the 22, 23 times PE multiples in the markets will have to be brought back down to 17. That causes a sell-off. And then that can kind of capitulate into everything. And I think at some point in the next 3 years, somewhere in there maybe, we will have that moment where rates are going to go higher it's going to then domino affect a lot of different markets. When that happens, in my opinion, on the breaking models point, that's when everyone's going to realize there's no more flight to safety to T-bills and treasuries. You're going to run to gold and Bitcoin. It's going to be the two non-counterparty monies. And that's where you're ultimately on that next money print in the middle of some crisis like that. And it's a nasty recession and the $4 trillion deficits are suddenly becoming 6 trillion faster than you can think. Like, wow, like that's ultimately where I see this thing playing out when it's a real crisis.
Yeah. I was just talking to, like I said, James the other day, and we were talking about just even numbers of that, the last, what was the 2020, they were printing, what was it, 5 trillion or 6, 7, 8 trillion or whatever. Yeah. And he was like, yeah, it's going to be 10 next time, maybe 20, maybe 30 trillion they have to print in the next time, the next big print, as in Larry's book, he points out, right? So it's one of those things where, is it just like,
yeah, and by the way, just on that point, like, you don't even need stocks to go down that much to get that, right? If you just have a sideways stock market, suddenly the tax revenues, like, we're so financialized, our markets, suddenly the tax revenues are flat for the government, and the deficits start to swell. And then if that causes, again, rates to go out, and then that hits companies and earnings, and then therefore starts leading to layoffs, and then suddenly state unemployment benefits have to be paid out more. So suddenly our mandatories are going up. Like, you can see how this accordions from 2 to 4 trillion to 6 trillion fast, the deficit. And then there's the risk of that. Do we get into a real true debt spiral of a fast one where then the markets are freaking out on that? I don't know. I mean, that's why I think the next crisis, whatever it is, whenever it is, that's like '08, it's going to be at the sovereign level. It's going to be stuff like that related to credit markets and rates, I think.
Have you played that out in your mind at all? I mean, just even, talking to, Larry about it or whatever, like when you like, just like a thought experiment about it, because it's that, to me, I think, is the most fascinating part of what does the next crash look like, and what are the potential, because again, we've the only thing, we can only go off of what we've experienced, in the sense of, we saw '08, we saw the dot-com crash, there's certain things where it's like, okay, and then the Fed comes in, tries to paper it over, some people get wiped out, some people benefit, that the wealth gets transferred, but at some point, that death spiral, that's a reality. I mean, at what point do people just lose confidence? You only need a couple percent, in my estimation, of people being like, I don't trust. I mean, again, politically, we got a lot of things going on in the world where you just need, how many more pins do we need that are poking at the bubble or the balloon, in order to just boom? I mean, the thing just falls out and there's no coming back. I mean, like,
well, and that's why, I think it's a great point. The answers, we talk about it all the time. We're always going through those scenario analysis. That's why we started out this conversation with the social element of the whole Charlie Kirk as the latest example. And you could simply say, well, this is fourth turning stuff. And I agree it is. We are in the fourth turning. We're late in the credit cycle. We've got a lot of financial. I mean, I think Dalio's models are right. You've got internal conflict. You've got external conflict, as he talks about. And you got this debt problem. But the internal conflict is the far right and left, talking at each other, yelling. And, I mean, hell, I see our Seth Moulton, our congressman up here in Boston, in Massachusetts, saying today, well, why won't the Trump administration come out and condemn all political terrorism? I don't see them commenting like we Democrats did. And I'm reading this, I'm like, what? Like, of course, people should condemn it, but like,
right.
Like it's just words too. It's also silly. Like I am a Democrat. You saw all the Democrats saying, "Oh, I condemn political terrorism." It's like it's just like it's like phony words. Like, I'm just tired of the rhetoric. I'm tired. I want to see actions. I want to see people come together in the middle on all things: politics, business negotiations, everything. Like, meet in the middle. Like, stop going to extremes in media and in politics and in society, and find common sense middle ground. And I think we will get there. We're not ready for it yet. It reminds me of the 60s. And so the 60s, that's the internal conflict. Then the external conflict is obviously the geopolitics, the BRICS. You can see this gold system setting up like we were talking about, and the tariff wars and all that. And I think that, so like, there's tons of things. If I were betting, I think this is like 1998 though. Like we're probably a year and a half to 2 years away from real economic pain. Why? Because you look at MasterCard and Visa data, people are still spending and traveling. TSA data, airports, still traveling, spending.
Yeah.
The consumer is stretched though. You're seeing kind of delinquencies on 90-day delinquencies on credit cards starting to percolate and spike higher. There's no doubt inflation is biting all of us. And I think you are seeing jobs. The one thing that worries me in the short run is jobs. Like if the JOLTS jobs openings have gone like that, and you're starting to see college kids starting to not get hired, and unemployment tick up a little, like if that inflects, okay, that I worry about. If tariffs, at some point, tariffs are going to bite us. They are. It's either the consumer that's going to take that pain and have to pay higher prices, and or the companies are going to get squeezed on their margins. And corporate profit margins are at all-time peaks right now. If that goes on profit margins, well, then earnings are coming down, the growth rate, and therefore stocks are going to fall over, and we're going to talk ourselves into a recession fast because we're so financialized. The stock market really drives everything. And I think Trump knows that. That's why he reacted quickly after April's decline. And I think that it's a fragile system. It's because it's debt-based. So to round it all out, yeah, like I think we're kind of in the 1960s social environment, fourth turning call it, but 60s was not fourth, but it's like that. It's political divide, and again, Balaji's argument on the internet I think is brilliant of how that kind of really set in motion this divide, and society kind of just having a lot of weird things, right, of people's views, and the woke culture that then is a reaction to that. And I'm a libertarian. I just want to see people live in peace and have freedom, and um, but I think we are divided, and I think that Bitcoin ultimately is what will help fix some of the problems of society in terms of the broken money. And I think that forget about us having to be on a referendum of pushing Bitcoin or gold standard on people. It's just markets are going to market. It's going there, whether you like it or not. It's going there, and you can see all the seeds setting up with the bricks and gold, with strategic Bitcoin reserve discussion, with all of us and guys like you and media driving this understanding of why we're even involved here. So I think that it's inevitable that all roads are leading to this. But if I had to guess, it's probably 18 to 24 months away before the markets are kind of breaking. I think that it breaks at the rate level or on the dollar level. If the dollar declines massively, in other words, if Trump and them are purposely trying to depreciate the dollar to regrow American manufacturing, there will be costs associated with doing that. It's a fragile system. In other words, I might even agree with them that needs to happen, or I may disagree. It doesn't matter. I just think when you try and do those policy changes in a fragile debt-based system, there's policy error is really high, no matter what you do. Like, I'm not even going to criticize them for any of it. It's a fragile system that they've inherited. The same is true with rates. It's a fragile system. If rates go out too much, or they decide to print money, gold's going to win, Bitcoin's going to win, like no matter which way they choose. Because if they let rates go higher, it's probably breaking the economy. People aren't flying to treasury bills. They're going into gold and Bitcoin ultimately. Bitcoin, again, will be volatile in the short run, but it is gold in the medium term, and it's digital gold. So again, I'm going off in different directions there, but I think that that's kind of how I see things playing out. It will take time, a few years. B, it will impact rates and dollar where I think the next crisis is, and then C, there is no Fed to bail out the Fed, right? The BIS can't do it. Whereas in '08, the Fed was there to bail out the system. They could bail out the Wall Street banks and safe harbor all the bad assets from Citigroup and all that and save the system. There's no one to do that at the sovereign level. Like, one of my favorite investors of all time is Seth Klarman. He's talked about that. Like, at the next, like the risk is now really high on any next crisis.
Yeah.
Now, the simple answer from Bernanke and others has been, well, we have a printing press at the Fed. We can bail it out. I agree with you, Bernanke, but that's why gold and Bitcoin will do this. And if you're not careful, and if gold and Bitcoin are doing that, now you can turn this thing into a Weimar Republic type thing. And that, one last point, like that's where I remember in '04, people in '05, '06, people saying, well, there's no housing bubble. Like, it doesn't all correct in the United States at once. Well, everyone forget the early 30s. It all corrected at once. And same thing I'm hearing now. Well, the U.S. really can't default or have Weimar because we have a printing press. But that's the point. Like, of course it could. I mean, we live in the news cycle. This stuff spreads like wildfire in minutes. Yeah. And so, like, news can travel fast. And so I think, gold and Bitcoin will be the canaries in the coal mine. So anyhow, I go off in tangents and long-winded, but those are some of my.
Those are great. Everything you are learning in this episode is completely moot and does not matter if you hold Bitcoin and are still leaving it on an exchange or sharing keys and your KYC information with a third party. This is your wake-up call now. You are only self-sovereign if you alone hold the keys to your wealth. 100% self-custody sounds daunting at first. Believe me, I lost 2 years of massive gains over a decade ago because I was worried about taking the few minutes it took to understand self-custody. And that's exactly why you need to talk to my friends, Tony Yazbek and his team at the Bitcoin Way. We just interviewed Tony recently, has over 80,000 views, an overwhelming response. People love his story and the simplicity he shares of how easy it is to custody and take ownership of the greatest money we've ever seen. They'll train you to do it right the first time. Head on over to thebitcoinway.com/Brandon to schedule a free 30-minute consultation today. Their 5-star rated service is exactly what you need. Quit sitting on your hands like I did and get started today. Again, that's thebitcoinway.com/BRANDON. Now that you have the professional team in place, you need the professional tools to store your generational wealth forever on a titanium C plate. Your 12 to 24 words are your generational wealth. That is the key for your Bitcoin, no matter where you are in the universe. Go to Stampseed, code Brandon at checkout for 15% off store-wide. This withstands fire, flood, nuclear fallout. We shot hockey pucks this thing. Don't become a statistic and put your generational wealth in paper. Go to Stampseed now, code Brandon at checkout for 15% store-wide to secure your generational wealth forever. You mentioned the BIS really quick. I would love just a 30 seconds or a minute on why can't, because again, the average person watching might not know what the BIS is, a Bank of International Settlements, and it's kind of like what the central bank of central banks. It's like why can't they theoretically, why are they backed into a corner? Like what does that look like? I guess just for the average person.
I think the BIS ultimately could set up swap lines. I mean, look, again, I think those of us watching here in America, we're also biased, right? We have such an American egocentric perspective of, well, it's always the Fed that's setting up the swap lines to help the world because we're the world's reserve currency. And that's all true and will remain true, by the way, I think. But I think that what I think people are cavalier to risk on is just, this is a global debt problem. Like, you're going to have swap lines kind of like coming from China or Asia or Japan to come help the United States if like rates start spiking here and there's problems with our dollar and currency collapsing. Well, good luck in this external conflict world that Dalio talks about. And so the BIS isn't going to necessarily be able to set those up. And that's when this thing truly would mirror 08. In other words, let me play out a real dark scenario. The way Bear Stearns was the first one to start going down in the fall of 07, right? When we woke up, as I recall, at my hedge fund, it was August of 07. Jimmy Kane, the CEO of Bear Stearns, was out smoking pot, playing bridge in Florida, and Bear Stearns was correcting. And a month later, it kind of leveled off, Bear Stearns did, and you started learning about Ralph Cioffi and the guys at Bear Stearns hedge funds, and you realized, oh my God, Bear Stearns is a gigantic hedge fund, like long-term capital management. And then that just kind of bled until March of 08 when JP Morgan bought Bear Stearns. And everyone for a moment thought, oh, okay, phew, Jamie Dimon saved the system. He bought, I remember reading the Wall Street Journal articles today, back in 08, spring of 08, of Dimon saved the system. He just bought out Bear Stearns. Oof, thank that's over. Well, guess what? A few months later, it was Lehman. And then a couple months later, it was Merrill Lynch. And then and it was like, boom. And then suddenly it was like 7 different banks. Goldman Sachs at 34-1 leverage, where I just worked there a few years prior. And I watched Goldman go from being an investment bank to a levered hedge fund as kind of Hank Paulson ran off to the treasury and kind of the fixed income guys took over running Goldman. And you just knew it was the nature of the firm. It had become a hedge fund. All of Wall Street had, every bank had. So my point is this: picture every country in the world that has these debt problems. It's just not the U.S. that has this. If you start having that Japan is in trouble and going under, and the U.S. is providing swap lines, the way Goldman was providing swap lines and Merrill providing swap lines to Lehman, only for a few weeks later, people to turn around and say, well, what about Goldman? What about Merrill? Okay, U.S. provides swap lines to Japan, but then people say, well, what about the U.K. and the U.S.? And now everyone says, get me the hell out of Lehman, get me the hell out of Merrill stock and bonds. And at the firm I was at, we had credit default swaps with Lehman as our counterparty. We punted those when Bear Stearns was in trouble in the fall of 07, which was a smart move by the founders of our firm because they knew like this could daisy chain. That same thing will play out. You will have it where No one will want any treasury exposure to Japan, China, US, UK, Canada. There'll be very few safe harbors. Ironically, Russia probably has the best balance sheet of any sovereign out there because of the 1998 restructuring in Russia, and because of such a commodity heavy place. But it's too small. It's too small of a market to absorb all that capital. It will be gold and Bitcoin that will be the off ramps that everyone runs to even harder. Like the run in gold right now, like you haven't seen anything if what I just laid out plays out, where it's a global sovereign issue, like all the '08 banks in trouble. They're going to run to gold and Bitcoin like faster than you can blink. And think about Bitcoin. It's probably, in my opinion, somewhere between a $1 to $1.5 trillion market, meaning I think a lot of the hodlers will continue to hodl. And we know that there's at least 3 million lost coins. This is, I think, I hope I didn't say millions. I meant to say trillions. It's a $1 to $1.5 trillion market, Bitcoin. My God, if you have $300 trillion worth of global bond money out there, if only 10% or 30 trillion is coming looking for gold and Bitcoin at that point in time, and gold's probably a 15 to 20 trillion dollar market. I don't count the antiquities and things in the vault. It's the Vatican. I think that's overstated when we say it's in the 20s. Yeah. The point is, there is so little of gold and Bitcoin and so much capital in the world, sovereign capital, institutional capital, that will come flying into the only two non-counterparty monies. And this is why Ray Dalio a month ago was saying that 15 to 20% of people's assets should be in gold and Bitcoin, right? And he favors gold slightly more because his view is that gold is less transparent than Bitcoin, right? Bitcoin's an open ledger. But Ray admits that both Bitcoin and gold are the soundest forms of money in the world. So, like, again, I'm laying out what I think a timeline could be. It's probably somewhere in the next 3 years that you could have some sort of crisis. I think it's dollar or treasury bill related, treasury rates, or in some other market in the world that the currency's collapsing where the rates are jacking. This will daisy chain. It will remind you of '08 when those banks were going down, first Bear Stearns, then later Lehman. But it's not a straight line. It doesn't happen in weeks. It happens over months and quarters. And it played out like '07 and '08 played out. That was really like a 14-month slog, as I recall trading in it. And then I think it will look like US is providing swap lines 1 week to some country in trouble, only the way Goldman was providing swap lines to Lehman and Bear in trouble, only for a few quarters later that people come calling for Goldman and Merrill's heads. And I think that people will then question the United States' ability to withstand the storm. And the only contracts that people will run to will be gold and Bitcoin related, in my opinion. That's why I can't even get that excited about stable coins. Ultimately, stable coins are tied to it. And I think stable coins have an interesting purpose with payments. I can see that market growing for sure. But I think we can lose our sights of what we're talking about. There's only two non-counterparty monies in the world. It's just gold and Bitcoin. So even stable coins, I can't get that riled up about or jazzed up about. Wonderful business models, by the way. Tether's probably one of the best businesses in the world. Circle, interesting too, but I think Tether in particular because of the head start. So anyhow, let me pause there. I could keep going on rants, but
it's phenomenal stuff. What going back to all the things we've been talking about, even the social layer, from my experience, truth doesn't just win at the end of the day. And it takes, like you said, people educating others, over time. These are all human systems at the end of the day, Bitcoin, everything. They're all, political systems, they're human systems. And if no one pays attention or good people sit idly by doing nothing, then nature abhors a vacuum. We kind of see what's going to happen there. So in saying all that, like, what do you think? Is it just education that's needed for Bitcoin? I have a problem with people saying Bitcoin's inevitable because it's truth, it's rules, not rulers, and you can just kind of sit back and do nothing. And again, clearly in the political realm, we can see what happens because most people are good, or we're made good, but most people act good on a daily basis, and then they sit back, they do nothing, and they kind of they recess into the dark corners of society or are out of the limelight. They don't open their mouth, they don't say no to evil things, to put it very short and succinct. And we have things fester over time, as we're seeing. So in
Yeah.
saying all that, I mean, what's needed for Bitcoin? Like you said, people are going to flock to Bitcoin and gold as time goes on. I mean, right now, people are they're fighting over stable coins. They're trying to get into altcoins, all these things that have counterparty risk. They're controlled by someone else, foreign exchange, Forex stuff, other currencies around the world, other stocks. They all have risk, centralized risk, counterparty risk. So is it just education? Is it black swan events? Like what's needed? Hopefully not black swan events and bad things happening, more things, but what do you see in order for people to start seeing the light? Like you said, such a small asset class. How do we start really increasing that and having people see the answers we have right in front of us?
Yeah, geez, great question. I haven't thought about this. I guess again, the libertarian part of my brain goes to like everyone's got to do what they got to do. I mean, like I think like I'm some people like guys like you that are taking the lead as you talked about, like where you felt like at one point in time you were on the Charlie Kirk path, and then kind of got off the political thing and kind of found Bitcoin, and you've added so much value in this space um, by doing what you do, hosting this podcast, and others are more vocal. I tend to be a little more, quieter on the background, and I'm just more always been someone that's curious and observes, and then likes to invest around trends.
Mm-hmm.
So I think it's everyone's got to do what they got to do and what they're comfortable doing. I do think that we should step back as a society and realize, in the spirit of that Charlie Kirk, like let's talk about some of the positive things that he always did, which is fair debate. Hearing both sides,
Mm-hmm.
let people talk, and then yet hold your passions and views strongly, but learn how to debate constructively. And God forbid, let people have their opinions. If someone doesn't agree with us that Bitcoin is not the store of value of the world, and that, then that's okay. They're entitled to that opinion. We can only do what we can do to kind of lay out what we think the probabilities are of how things play out. Like again, in the last 5 minutes, we've laid out probability I think is high of that scenario of in the
Yep.
next 3 years, that type of a crisis and what it will look like, and how this will go down at the sovereign level, a lot like '08, where each bank was called into question, each sovereign treasury will be called into question. There will only be two off ramps. So I don't know if that's fact. I think the probability is really high though, but I think that I need to be open to other people's views on that if they disagree, and I am, and I think that. So again, I'm going off on a tangent here, but I think that we as Bitcoiners, like, you have to be open to people's views. It's okay if someone's not ready to understand Bitcoin yet. That's okay. We can do our part. I just think it is inevitable in the sense that ultimately markets are going to dictate where money's flowing. It's Gresham's law, and it kicks in
Mm-hmm. Mm-hmm.
ultimately where people run to the soundest form of money. Because in the scenario that I talked about of what I think is going to play out and whenever that crisis is, and again, as I've said in the past, I can be off. If I just said 3 years, then probably it's 5. But when
Mm-hmm.
that
Yeah.
plays out in the next, it's 5 to 10 type year time frame, I would guess. Call it 3 to 10 year time frame. I think that when that happens, you're not going to want to be in equities. No one's going to want to own equities at 24x when the world's coming into question. Like I truly think that a vast majority of capital in the world is going to run to gold and Bitcoin. And the only thing we could do is try and educate people to have some percentage of their portfolio in these asset classes. And that's up to them to decide though. I can't beat someone over the head and say, thou shall have 20% of your assets in Bitcoin right now. Like they just have to hear our thesis of what we think the world could look like and probabilities. And then people that are gold people, like Larry and I have always been laughed at by a lot of gold people saying, what are you idiots doing in Bitcoin? We're getting that a lot now, by the way, from gold people, because gold's working. Whereas 2.5 years ago, we'd have people calling us up in the Bitcoin community saying, you guys are dinosaurs. What are you doing in gold? You're those idiots. And our view is always
Can't
like,
win,
no,
David.
well,
You
you got to
can't
be
win.
diversified. No, the
Yeah.
answer is,
Yeah.
again, I wanted to hear both sides, and I respect both
Mm-hmm.
sides, but I think what people forget is you got to be diversified. You don't know when things play out on what time frame or what the world looks like. We're dealing in probabilities, and so
Mm-hmm.
um, like I happen to agree that I think Bitcoin actually will outperform gold over 5 to 10 years by far. Um, but that doesn't mean they're mutually exclusive. Like gold and
Mm-hmm.
silver have proved that
Right.
over the years. Gold and silver is a phenomenal investment right now and still has massive upside. But gold and silver, they're not mutually exclusive, and they're cousins, and as precious metals and monetary properties. And I think that gold is going to, I mean, Bitcoin's going to be like that too. It's going to be a relative of those. And so it's a digital form of it. So I think that Yeah, to round out the answer, I think that people have to do what they're comfortable with. I think everyone should be mindful of, be open minded. Like, it's okay if Peter Schiff disagrees um, that Bitcoin is a store of money. And sure, do I think Peter is obnoxious in how he debates people? Yes, of course. But like, he's entitled to that opinion, and we have to respect that. And that's up to Peter to make that decision whether he's right. If he's so sure of it, then he should go short Bitcoin, right? And and good luck with that. But I think that that's for him to decide. And we all, again, I think that's something, I guess, in the last week where my head's been thinking about is we have to learn tolerance, like tolerance to the other side. You don't shoot people because they have a different opinion than you. God forbid, that's ridiculous. I mean, I thought we learned that in the 1960s and some of the assassinations then. And no, if someone doesn't agree with your view, then respectfully agree to disagree. And that's what markets are about. And I think that that's all gold and Bitcoin are now too. These are difference of opinion. And look, the equity market could be right. Maybe these AI things really are massive game changers in the next 3 years, and that you're really not paying 150 times earnings for some company in AI that you think you are. You're really paying 30 times 3 years from now. And so, like, I don't know. I tend to have views that the probability is low of that, because I think there's challenges in AI that remind me of the 1999 2000 data center investments, where the internet was absolutely a game changer. So will AI be, but that doesn't mean that asset values aren't way ahead of themselves. And so, those are just some quick thoughts.
So just even the next 10 years, we've kind of talked about this a lot. And you mentioned the demographic cliff. And this is something that's really been on my mind really for years. I mean, I guess 10, 15 years. We talked about earlier what woke me up 15 years ago, the '08 crash, obviously, what was going on in politics at that time and the games that were being played. And the demographic cliff, Harry Dent has written about this obviously at length. He's probably one of the biggest guys in that demographic cliff space, the big guy in that space. So to me, I see this huge transition, this monetary wealth transition, transfer, everything, the silent generation really starting to go away, the last vestiges of them being in power. The boomer generation is starting to be there, will eventually over the next 10, 15 years really kind of recede from power. We'll call it maybe 10 to 20 years. But what do you see, like when you zoom out, is it just a case for, like, when we look at all this, is it just a case of us being a little too high time preference, honestly, like a little bit too short-term focused when you zoom out, like you said, it is inevitable that you have to, when you're in debt-based system like this, you have to print. So Bitcoin, like you said, Bitcoin and the precious metals are going to go up over time. I mean, it's, you hate saying guaranteed, but it's literally guaranteed to have to go up over time, because that you can't have this deflation, quote unquote, in a system that is designed with debt. Is it not?
Correct. Deflation is the devil. Deflation is the devil, as we
Yeah.
used to say in '08, right? We used to say that in '08 because, and that was well before we've had the debt problems that we have now. So yeah, in a debt-based system, you can't have deflation. I love Jeff Booth's theory of, of course you can, and he's right. But the problem is you've got this debt load right now, and you got to figure out how to get your way out of this. And ultimately, there will be either a reset or a default. I think when you control the money supply, the U.S. will not default like an emerging market, right? An emerging market doesn't control the printing press. They were borrowing in dollars in Brazil or Argentina. But in the U.S., it'll be a self-default. They'll try this inflationary route first. And so I think that, as I step back on 10 years thinking about it, I actually, again, I feel highly confident this is more like 10 years, not 20, because the average boomer is about 73 years old.
Mm-hmm.
The healthcare, Medicare, and Social Security drawdowns are massive. What I observe is, again, it reminds me of the '60s. That the '60s were the boomers, right? They were coming
Mm-hmm.
up. They were watching 57,000 Americans die in Vietnam ultimately, and 18-year-old kids on their street going off to war and dying, 17 years old in cases too, and that really tangibly, palpably impacted them. Based on what I've studied in history. I was not alive, obviously, but what that was a real major change in the free love society, the '60s, and go back to the '68 Democratic National Convention and protests, ultimately culminating in the early '70s of a distrust of government and basically a broken Washington as Nixon left, where the boomers made the change. They changed it. Demographics matter. like your generation, like you're younger than I am. I would argue the 25 through, call it the 21 through 40-year-olds right now, they're going to drive the agenda. That's one of the things that drew me into this whole Bitcoin investing space was I could see that cohort of people mad as hell because it's expensive to own homes. They're working their tails off. They have student debt. Jobs are not, as plentiful as they once were. They got sucked out to Asia. This whole trend is got a pissed off cohort. That's why some of the survey data, I don't know if this is true, that some high percentage of people in that generation of millennials and Gen Z are like okay with Charlie Kirk getting killed. Again, I want to see who the source is, but if that's true, but like someone sent that over the weekend and I'm like, part of me is like understands like they're pissed. They're broken money and it's a broken system and they don't understand how irrational they are in that thought process. But I might actually believe that survey that those people think that way.
Yeah.
And yet it's sad and pathetic.
The United Healthcare guy, CEO, they got the same stats of people being okay with that. Yeah.
Same thing. And it's shocking. Wild. Like what happened to our moral compasses to say that's a human being, a father of children that should not deserve to die for having different views. And yet here we are. And I think that this will play out over 10. That cohort in the 30s, call it, year olds, they're driving change. They're going to drive AI change. They're going to drive, wealth and money change. And you see them moving in and embracing Bitcoin. It reminds me of the 60s, the way the boomers were going to ultimately break Nixon and Washington and end the Vietnam War and then take over as their demographic became the driving demographic in the late 70s and 80s as they had children and were growing society and spending money. The demographic thing that you talked about with Harry Dent, it's like the concern is if we're only having 1.4 kids now per couple versus 2.4 just like 9 to 10 years ago, that's a major step down. Why does that matter? Because your brain should say, well, that shouldn't matter because we're going to have AI. We don't need all these bodies. We're going to be more productive. Possibly true for sure. That's why I never want to be doomsdayer. Like you're dealing with probabilities and things are never going to be as bad as they seem and never as good as they seem. It's like somewhere in the middle. But I think that you're going to have a demographic challenge that those are people that would have been spending money to raise children. And we are a consumption-driven economy that needs inflation to service the debt, unfortunately. And so if you have deflation from demographics, my God, like that is a real challenge. And then if we had deflation from AI, because Jeff Booth theory plays out, but it's eliminating jobs. And I got business school friends of mine at places like Amazon saying we're not hiring people right now at all. We're systematizing everything, robotics and things like that. That scares you a bit, right? Of what this could look like in the next 3 to 5 years, as we were talking about. So there will be challenges. And again, I'm biased, and I have to question that bias all the time. But I keep coming down to it won't be flight to safety of treasury bills. It's going to be the two non-counterparty monies in the world, Bitcoin and gold.
And the other thing I was thinking about too, we had long drives this weekend and talking to my wife about this, but it's the long-term ramifications, the social implications of when people, I mean, that's a massive shift going from, 2.4, losing one whole child per family. I mean, that's wild. I mean, that's a whole different talk for a different day on its face, but it's like the long-term ramifications of society of why would humans care about long-term society at that point, right? Like if you don't have children, and some people can't have children and things happen, but if you don't have children, why do you care? It's about you. It's high time preference. It's about you right now and what matters for you and you only. There's no reason to think long-term. And that's, we've sown the seeds and we are about to really start reaping those rewards. And like you said, it's gonna be papered over mass chaos by the currency printers.
And if someone's in that demographic out there that's pissed off and saying, no, I'm okay with the UNH guy getting shot, whatever, and I don't have children, like, look, we have to respect that opinion too. And that person, that's a human being. Like, it's not for us to say thou shall have children. And it's like, everyone's got to decide.
Right.
But it's about meeting in the middle. Like, what's the middle ground? And in other words, I can sympathize with some of that cohort that's pissed off at the world. I would argue
I understand why. Yeah, exactly.
Yeah,
we get
it's
why.
like forgive them for all the they know not what they're doing type thing. Like they just don't understand that when they're supportive of Charlie Kirk getting killed or the UNH guy, like they're irrational, but like you actually have to have sympathy for someone like that. Don't come at it from the far right and lambast them and say,
There are
Like,
reasons. There are reasons. Yeah,
yeah, like
100%.
some like
Yeah.
that kid getting arrested for stomping on the Charlie Kirk Memorial this weekend.
Hmm.
Like, okay, I wouldn't want my kid doing that. I don't support it, but
He's
like
hurting for some reason.
that
Yeah,
guy's hurting for some reason. We
for
have to
some reason. Yeah,
understand that, and you have
yeah.
to then understand and
Hmm.
say that person's entitled to a view, and we need to then figure out. I guess what we're concluding is we better damn well understand that whether you're core devs and knots, or whether you're the far right and far left, you better find middle ground, or it's going to be a
Yeah. What are the
freaking
roots?
brutal bloodbath where we're
Yes.
all just going to sit there and crush each other. And
Yep.
that is Genghis Khan stuff that's stupid.
Yep.
Like,
Yep.
get a rational brain and find middle ground. And enough of my rant, but
Yeah, no,
those are kind of where my head goes.
it, not to belabor the point, but yeah, exactly. It's just getting to the roots. And again, that's where Bitcoiners, sound money advocates, the gold bugs, silver bugs, and this for decades and decades. I mean, this is why you have a segment of society has started asking these questions of like, we can fight red and blue all day, but what are the roots of these issues? Like, let's get to why is this guy hurting? Why was that guy hurting? Why did that person get killed? What was the reasoning behind that? And that's where it feels like society is so frustrating because no one's asking those questions. It's just we're on the hamster wheel all day long. I'm tired. I jump off. I don't have time to go deep, ask three questions deep. I just surface level. What does the media tell me? Okay. It's just wild. Like, how do we get off that hamster wheel? And that's, again, going back to sound money, why we're here.
Yeah, to me, it's like three or four things coming to my head. It's the sound money argument that Larry's made with his great book, The Big Print.
Mm-hmm.
I think Balaji's argument on the internet, but let's
Yeah.
back up. Let's do it chronologically. So 71, we go off broken money. Then you have the technology impacts of Microsoft and Intel in the 80s, the internet in the 90s, the securitization markets that allowed all this leverage to happen so that the rich got richer. And if you were a white collar job with a high education to benefit from all that inflation of assets and stuff, you rode the wave. Yeah. And if you didn't, man, you're getting crushed by inflation. And then the internet comes along, like Balaji says. And the internet then broke media that forced the media to actually get far right or far left to play with people's minds and views. And the internet also then dumbed us down where we're seeing this FOMO of, oh my God, look at that beautiful person. I better go get myself some plastic surgery to look good too. I can't keep up with the Joneses. Or that guy's driving a Lamborghini. I don't have that. I drive a Toyota. I'm not keeping up. This pressure of society. And I think that all of it has led to this point where we're at each other's throats with this internal conflict. And I think that, it's all tied in together, and here we are now. Again, I just happen to think that the way trends are going to play out, that again, sound money assets are going to be the biggest benefit. Those are going to be the ramps, the safe harbors, if you will, that people are going to run to with that 1 quadrillion of global capital. A lot of it's going to end up in those safe harbors of sound money, and so and again, doesn't mean that that's happening imminently, but it's like, in my opinion, over the next 3 to 8, 10 years, like this is incredibly inevitable and high probability. So, I hate to say it. And again, it's just calling balls and strikes. Like this is not easily solvable. We can't just come back with the AOC 4 years from now and she wins the election. Suddenly everyone on the right's like, oh, okay, we'll go along with that. And likewise, I mean, the Trump administration, I agree with some of their policies. I'm a libertarian and I vote for either party, but I don't, I agree with some of their policies, but I think some of it is heavy-handed. I don't think you should talk to people and negotiate that way. Personally, I think there's a way to find middle ground, but that's just me. And I think that if you got to have some diplomacy skills to kind of get stuff done. But I recognize that some of my pro-Trump friends and people in the administration would say, BS, David, we need to come heavy-handed if we're going to enact change, because they won't listen if we don't do it. And I respect that view too, but we gotta somehow find the middle ground. And then sadly, I hate to say it, I think it's only after a crisis do you find that. That's why I hate to say it, but I think it's coming the way that I think it will have to do with currencies and or rates. It will be at the sovereign level, and the way we had '08 banks going down, it's going to be like that with sovereigns, and there's going to be 2 safe harbors that people are running to, and none of us in the gold and Bitcoin space should celebrate because we have, to whom much is given, much is expected, and we're going to have to step up and be the leaders of society to really help make sure it's a fair society and change is happening, not just go out and sail off to the Caribbean with our spoils. Like
Yeah.
it, I think that's it gets back to your question earlier. I often think of that on the other side of that crisis. That's when it's our job. Maybe that's the time when I'd want to be more vocal and stepping up
Mm-hmm.
and trying to be more leading that way. But anyhow, those are some just random thoughts.
Yeah, boy, that's another whole talk for another day. Like you said, on the backside of the crisis, and what does that look like, and how are we picking up the pieces? So it's, I know some people have written about it. Actually, I think it was, I think Alexander Svetsky wrote the Bushido of Bitcoin, and kind of being a leader through those times, a crisis, kind of crisis times. So when we get to crisis, real crisis, or big global stuff, and then like afterward. I know there's like the Bitcoin papers, Natalie Smolenski, and some of them who have written about, governance in a Bitcoin world and things like that, and kind of the Federalist Papers style. So there's some good books out there for people to read and kind of look into for those times that are ahead. What are your thoughts on the, again, I feel like this is just in the pin on top of everything we've been saying, or the bow on top of it maybe, and just kind of the million jobs report with the 900,000 to a million, the revisement of what was happening, and why, I guess, edifying or confirming a lot of things that you've been saying in this pod of just why we're going to need this, and just is the economy really what it says it is, or what people have been saying it is. So I would love 30 seconds just on your thoughts of just the revisions and what you could see going forward.
I think it's probably a combination of some pizza pie of reasons for that. One is just the clean version of it's hard to track data like it used to. And then I do think there is some big piece of the pie that is conspiratorial, where it got politicized. And it was just like, throw some big number out there. Let's keep the economy going. Let's keep fooling the people. I hate to say that, but I don't think it's so conspiratorial anymore. I think a lot of political games, and by the way, they've always gone on. In the 1960s, you could argue that Kennedy's father, bought Cook County and won elections that way. So this, welcome to the world of incentives, and sadly there's people that cheat out there. And I think that, so I think that, I'm not surprised. And I think, sadly, I think that's what worries me now, is I think the job market is far worse than you think. And when I talk to my business school friends, like the BCG, McKinsey places, they're not hiring. And so when the consultants aren't getting hired by the companies, that tells you the companies are cutting back there. Okay. Now, when I hear the companies this year, like Amazon, friends of mine in business school that are in senior positions there, he said, we have to write memos that are like 9 pages long to justify the hiring of a human being, versus why the AI or a robot can't do it easier than that. So and as he said to me, he goes, I don't think the market fully understands, this is his personal fear, fully understands what we at Amazon and others are doing of not hiring people, and what the ramifications of that are going to be to labor when you wake up in a year or two. Now, on the one hand, I think we all know that AI is displacing, but when I hear him say that,
we don't know how.
This was 2 months ago, you're kind of like, oh my God. Like, so I'm talking to people on the front lines, again, senior guys at these places, and you're like, Jesus, that scares me. So that's why I worry about labor, that then leads into dollar declines and T-bills. And the question is when. And as I said, in my own history, it usually takes longer than I think. That's why I throw out big, broad numbers like 3 to 8 years. Right now, it doesn't feel like that's happening this year. Like, those things aren't biting us in the butt yet. I think you can see it in some of the Visa, MasterCard data that we talked about earlier, and TSA data, things like that. But ultimately, delinquencies and credit cards will matter, that are trending higher, ultimately jobs like that. So anyhow, that's long-winded, but jobs, I certainly do worry about it. I just wonder if it's more of a year from now, we're going to be like, oh my gosh, talking more heavily about this.
It's incredible. I would love your thoughts on, I got my beautiful passport here. We just started being sponsored by Foundation, an incredible company, Bitcoin centric. I mean, helping to solve the problems of all the things that we've been talking about, quite honestly. What are some of the most important things for you? I mean, again, we've talked about a lot of these big things, global things, but like for the average person, again, just sitting there, what's the ethos, I guess, that you have, or maybe just, the Bitcoiners in general, of how does someone coming into this, maybe the first time they've heard of Bitcoiners, a couple times they've listened to a few pods so far, and they're like, boy, I really feel this chaos. And the last week, obviously, like, people are, I'm sure, coming to find more answers. Like, what is a simple, minute, or two elevator pitch of Bitcoin and custodying it, and just why it's so important, and how it really changes things for people?
Yep. So again, I think we've got into a lot here that I think that the probabilities are high that Bitcoin and gold will be the two scarcest forms of money in the world are going to be in high demand over time, over the next 10 years, given the debt problems, demographic, and given where we are in stock valuations and the like. I talked about kind of, I think, things like jobs ultimately, and tariffs could create pressure, tariffs leading to job losses that then could pressure markets from rates and dollars
Mm-hmm.
and things like that. And then when the swap lines aren't kind of free flowing like they have in the past to bail it out, that suddenly you're calling into question all sovereigns. So I'm trying to summarize a bit, but I think that people therefore need to understand that Bitcoin will be one of the most highest demand assets in the world, and it's just so small relative to gold that the asymmetry of Bitcoin is so massive. Bitcoin is a decentralized network that is different than every other crypto in the world, right? It's the only store of value in crypto. It's the original, um, and there's a lot of debates going on with core and devs and knots, but ultimately it's not consensus change, and yet it's important to listen to both sides to make sure we are thoughtful on how we are managing this network. But as it plays out, I think that people need to think about owning Bitcoin and whether they own it for themselves and self custody it versus trusting an institution like Coinbase or an ETF to do that for you. Everyone's got to make up that own mind. You got to know yourself. Do you trust yourself well enough to be secure in how you're self custodying it, and that you'll have a treasure map for your next of kin if you're hit by lightning? We'll be able to track your wealth. Being in the gold space for a while, I can tell you stories of people that, grandpa buried the gold in the barn and no one can find it. And they don't know if it got lost or what. So
Yeah.
be thoughtful in your self custodying. Make sure you have a good estate plan when you do that. If you have an ETF, understand the risks of that. When it's not your keys, not your coins, and yet understand that maybe that's the best decision for you because you're just too busy and cloudy in your own head to track it yourself. But I think the only wrong answer is to have 0% allocation to the space, that everyone should have, in my opinion, somewhere between 2 to 10% at a minimum in the space. I know Dalio has talked about 15 to 20% in gold and Bitcoin, and that makes sense to me too. But I like to tell people start slow. I don't want to tell you to go 20% now, because then when Bitcoin corrects 20% next month, you're going to sell it and panic and say, what did I do? I want you to baby step. Like it's like being a child again and learning how to walk. Just walk into it, go slow. But the only wrong answer is 0%. You should have some, because if I'm an idiot and Bitcoin goes to zero, and the whole network blows up, you'll never remember the fact that you had 2% in this asset class. You'll be fine. The reality is, I think the probability is that we're very high that Bitcoin is not going to zero. It will compound
Mm-hmm.
greatly. And if I'm right, that it goes to over 1 million plus a coin per the power law theory over sooner than you think, you'll be thankful and grateful that you had some exposure to protect your family's wealth. So I'll pause there. That's kind of at a long wind of how I tie this whole conversation together and how I think about it, all roads leading to Bitcoin.
That's beautifully said. Beautifully said. What are your thoughts on, we talked about it a little bit, kind of like offline earlier, but just, Saylor, what's happening with the treasury companies. And again, like some of the debates we've talked about, numerous debates today. One of them is, the MNAV debate, in a way, a lot of people going back and forth on that. But what are your thoughts, and just kind of, again, how you guys are looking at things with the treasury companies, the potential for them, but also the, maybe, the upside, but also the downfalls potentially of some of them, and just people maybe just glomming onto the trade and just, doing it just because it's the hot thing, putting .com at the end of your name. Like, where do you guys kind of sift the signal from the noise? And like, how are you looking at Bitcoin treasury companies?
Yeah, how I'm looking is I think that there are interesting levered ways to play Bitcoin. It's important to have a good management team that understands how to run a business and how to manage a balance sheet risk, right? Because what Saylor is doing is levering up. There is some risk element to it. I happen to think they're doing it with intelligent leverage and thoughtful, because he's doing convertible debt that's termed out. And I know that there's criticism of why that's a mistake, but he's also more importantly doing the perpetual preferreds now, which are never maturing, and it's a levered way to buy more Bitcoin. These are big capital markets to buy Bitcoin. MicroStrategy is trading at 1.46 times MNAV, I think, today. They're the scale player. They'll be like JP Morgan. JP Morgan trades at 2.4 times book value because they can generate earnings from their book of assets at JP Morgan. Michael Saylor is already generating earnings and growth through his current stash of Bitcoin, the 640 plus thousand Bitcoin he has. He's borrowing against that and issuing things like preferred stock. So he's utilizing that collateral already. And I think he'll continue to do that in due course and have real cash flowing businesses someday, probably 10 plus years from now, with that collateral stash that he has. So I think that MicroStrategy is one of the exceptions that will be worth a premium to its NAV. I do think some of the smaller treasuries that don't get off the ground, that don't manage well, they will trade at discounts. Ultimately, I think MicroStrategy will be, and other Bitcoin treasury scale players will be buyers of those businesses. So think about it. If some small Bitcoin treasury company has Bitcoin sitting on the balance sheet and it's the year 2031 and they're trading at 0.7 times MNAV, and Sailor's up trading at, say, 1.75. Well, he could just go buy them for 1.25. It's accretive to him and it's accretive to the small company that got bought out. He'll take over their Bitcoin. He'll sell the rest of his assets that he doesn't want. So I actually think this Bitcoin treasury movement is one of the best news stories for MicroStrategy when you look out over the horizon. When the capital markets are closed for them, someday they're going to be able to do stock for stock acquisitions of these companies. And it's something I was talking to the MicroStrategy treasury guys about a couple of weeks ago. They're not ready to do that yet, but I think in the future they will. And that's why another reason I think is in the positive column for MicroStrategy down the line. So the answer is you got to be, I think, a top 20 Bitcoin treasury company. I think scale matters, being thoughtful how you manage it. MicroStrategy is such a head start. They are going to be the gorilla that trades at, JP Morgan trading at 2.4 times book, when small regional banks near all of us in this country where we live in our states, they're at like 0.8 times book. Those trade at a below book value because everyone's worried about the commercial real estate loans and all that. That's how this will play. And I think that eventually you'll see the small regional banks gobbled up by the JP Morgans again when they're ready to do that in the downturn. And it takes time, but that's where this will go. So, the good news is I think Bitcoin price is going higher. Therefore, in my opinion, you're probably paying like 0.4 times MNAV 2 years from now, where Bitcoin will be on a high probability at MicroStrategy. You're paying a ridiculously cheap value for it. And again, I think it will trade at some premium to book. I'm not sure it will trade at 3.5 times MNAV, but I think it could trade at 1.75 to 2 times book value, kind of like how JP Morgan is traded like between 1 to 2.4, but on average about 1.8 times book value. I think that'll be MicroStrategy. So, and remember, your book value is growing all the time. People say they don't have an underlying cash flow business. Well, they have a book value asset that's going to grow in value. And that's collateral. In the world that we wake up, when U.S. Treasury bonds are no longer the global reserve assets and it's gold and Bitcoin, he's going to have it's like having JP Morgan having trillions of dollars of T-bills that they can use to borrow against and create yield with that by making investments with that money. That's what's misunderstood, I think, in MicroStrategy. And everyone's freaking out on Twitter and all that. And it's like we talked about, we're just in one of these kind of what I would call a bull flag period consolidation in Bitcoin. But I feel highly confident. Like my favorite investment we've just made in the last 2 weeks is buying January 2027 MicroStrategy call option spread trades. That, in my opinion, if Bitcoin simply goes back to $150,000 to $170,000 over the next 18 months, call it 150,000, and its book value. And this is a big if. I'm taking risk on this. Got to be right that its book value or its MNAV is trading higher than it is today. We're going to make out really well on that investment. It's a question of how many multiples we'll make. But I'm trying to take advantage of this market correction and some vol settling down on the VIX that allows these option strategies, spread strategies to play out. So that's, kind of my favorite, not big short, but big long type investment we've made here in the last few weeks that I think is very interesting. So, we'll see. I think that, there's probably too many though Me Too Bitcoin treasury companies, so you got to find the right ones, and scale is going to matter.
Yeah, I couldn't agree more. What's the total? So we've talked a lot about 10-year spans, 20 stuff like that, 3 to 10 years, all this stuff. And again, I think that's the best way to zoom out and just look at where the world's going. Obviously, seeing the trend is your friend. Obviously, is the big thing in investing, right? So follow that trend, ride that trend. What are your thoughts on just the total market cap of Bitcoin? Again, like a price is hard to say in the short term, right? But like, what do you think the end game is? Like, I know Jeff Booth is always talking about has to account for every dollar. It's got to account for, it's
Yeah.
money. So it has to account for all 900 trillion. Jack Muller says, hey, it's 450 trillion. It's one half of every trade money is. There's people way below that. And, it's got to get to, it's gold market cap. And there's Peter Dunworths of the world that say, hey, it's multiples of the 1 quadrillion. Where do you stand in just what Bitcoin's end game is, whether that's 10 years from now, 20 years from now, 50, 100 years from now? Like, where does it ultimately settle in your mind?
So let's talk 10 to 20 years. Like, I think it depends on what happens in the world. Does it become truly, do all these sovereign currencies blow up, in that crisis scenario that I talked about? Probably a high probability they won't. Like, we'll just have a system where we're kind of anchored back to stores of value like gold and Bitcoin. And I think that, but there are scenarios where it does, and Bitcoin becomes the leading global monetary network, in which case, God, you pick a number in today's dollars, it's probably $100 trillion asset. I mean, that's like a 50 bagger, 50 to 75, 80 bagger from here, right? Like, that's not crazy when people talk that way. What I kind of just ground myself in is just like the baby steps. Like, okay, over those like next 10 years in a crisis where the whole world doesn't implode and our currency system doesn't completely change, but we're more back to kind of anchored stores of value or whatever. Like, to me, the $300 trillion of bond money is the easy thing, right? Where I can see literally over half of that eventually coming for sound money stores of value. Not all of it. There will be, yields will go higher in some cases, that there'll be demand for that, for bonds. But to me, that's 150 trillion, like falling off a tree, that is going to kind of come in for gold and Bitcoin at some point over the next kind of 10 plus years, let's say. Again, we're at, in my opinion, a $15 trillion gold market today, and probably a 1.7 trillion Bitcoin market. And we'll leave silver out of it because it's small, but I'd count that in there too. And obviously real estate and paintings and art will be stores of value too, but these are the big liquid ones. And Bitcoin's going to be the most liquid one in the world because of its digital nature, right? You can't, if I send you gold to London, I got to figure out ways to get it to you. Whereas literally I can send you Bitcoin in a matter of seconds or minutes to your account. So that's what's misunderstood by TradFi world as well, is just that, how that will look. And so to answer your question, like, again, I don't want to be hyperbolic. I don't know what that timeline's like, but I think the probability is very high that over 10 to 20 years, pick a number. I mean, I think Bitcoin could be a $50 trillion plus market, up to 25x, 20 to 25x from here. Again, I hate to say falling off a tree to make it sound like it's that easy, but I just think the probability is very high if things play out the way we've talked about on this call, of potential risks to the global economy, what crisis will look like. And then if it's at the sovereign level, like we talked about, like, yeah, this will be game on in Bitcoin and gold. Like, you can't believe, like, you've seen nothing yet. And I don't say that with arrogance, right? Because I got to be honest, sometimes I get sick to my stomach when I think about that, because I think about all the pain in the world. And again, it's that scene from the Big Short movie, right? That, Brad Pitt character walking through the floor and yells at Charlie, and who Charlie was a classmate when I went to business school, by the way, the actual guy in that role, but in real life, but yells at them and says, stop smiling. This is pain. People are going to lose jobs. Like that, I'll be honest. Like, I'm not doing that for just being overly dramatic. Like it makes me sick to my stomach. Like, you think about how many people aren't in this trade and don't have this hedge on that we all have, and don't believe that this is where the puck's going. And so I don't say that with arrogance. I say that with humility. And I think that's, but I think that's probably what this looks like. And I don't say that with cockiness. Like, I don't know what that is like. I just happen to think that probably I'm describing of all things playing out over that next 10 years, and I could be off by a few years. Like, I think it's literally like a 65%, 75% probability type thing. That's how I think about it. And that's why we're here.
Yeah. Yeah. Well said.
Community is the number one most important thing in a survival situation. And newsflash, you're human, so you're in a survival situation. October 10th through the 13th is your island retreat. Camp Nakamoto, brought to you by Mass Adoption. I will be speaking there. Natalie Brunell, Mark Moss, Larry Lepard, David Foley, James Lavish, BJ Dichter, Luke Broyles, Michelle Weekly, and many more will be there to have fun. Lots of games, activities, Cattleman's Feast, crab bakes. There's going to be everything you can imagine in this beautiful part of Northern New Hampshire. We look forward to seeing you there for 15% off tickets. Gentile 15, Gentile 15, Gentile 15. There's only a couple dozen remaining out of the 100 plus that were available. So get them now. We look forward to seeing you in October.
We were just talking about in the spirit of debate and talking to people. This doesn't, unfortunately, the average person, again, is still just trying to learn money, obviously, and just what's going on in the world. And there's a lot of people that watch the show in that regard. I mean, obviously, when you go deep down the Bitcoin rabbit hole, there is a debate, I guess, so to speak, going on. Do you have thoughts on that, and just how the sides are handling things, what's going on? I mean, do you have any thoughts there?
Are we talking, sorry, on op return versus not?
So the core versus
Yeah.
knots, and just the mempool protocols.
Yeah. No, I do. I've been very involved in it. Been paying attention to it a bit. To be honest, a lot of it's over my head, right? I'm not a technical engineer by training, but have tried to learn as much as I can. I, go to a lot of the core dev type meetings that, at Fidelity in Boston last year. And then they had one at MicroStrategy's headquarters in April. And I went down to that, and I've gotten to know some of the people in the core dev side to really understand. We're also investors in Ocean Mining, Luke Dasher's company, Bitcoin Opportunity Fund. And so, again, someone might say, "Oh, you jerk, Foley, you're not taking a view." And as I said, no, I'm kind of trying to find that middle ground, and I guess that's where I come out. I think on the one hand, the core dev folks would say no one should filter, no one should have control. This is a decentralized network. This is supposed to play out how it's supposed to play out. Let the market decide. And we core devs have a job, though, to manage the software and some of the governance. And this is not a consensus thing, but we do need to kind of have some fixes in the system, because these JPEGs are going to miners directly anyhow, which is then clogging up the system because nodes are getting jammed up with JPEGs they didn't even know about. So let's increase the limit of the amount of JPEGs that can come into the space at any time. On the not side, led by Luke and Bitcoin Mechanic, those guys, at Ocean that we really respect, I think they strongly say no. Satoshi Nakamoto's view was this was a peer-to-peer cash settlement system. This was not supposed to be about freedom first and how allow JPEGs and stuff to come on here and gum up the system, because what that's going to do is it's going to gum up the nodes. It's going to drive up the cost to run a node higher. And therefore, nodes are going to leave the Bitcoin network, and therefore your decentralized system with 25,000 nodes in the world begins to decline. I respect that view too. My simple brain comes out on this, and I was on an interesting call Friday, and I had to jump for another portfolio call, but I want to follow up with some of the core dev guys that hosted it. Where's their middle ground? Why can't we find layer 2 solutions to this problem? Why can't layer 1 be a little more pristine, left as is, don't monkey around with it? Why can't we solve this that way? And there's some other interesting companies like OpNet that we're paying attention to, and that are talking about kind of bringing a little bit more of, smart contracts onto the Bitcoin layer through meta protocols and the like, where you're not gumming up the system, but you are taking advantage of Bitcoin's decentralized security. So to land the plane, I see the freedom part of my brain of Bitcoin that loves that aspect of Bitcoin, understands the core dev view of you can't have knots being filters on the system. And yet I respect the knots crowd that says you can't blow up the network decentralization of nodes and have all this stuff that's gumming up what was supposed to be a peer-to-peer cash network system, a monetary network. So my view is like everything, let's find middle ground. Like we just went through the whole Charlie Kirk thing, and we went through the political divides. How do we find middle ground? That's what I want to see more discussed about. And I'm sure the core devs would jump back and say, we did talk about this. We've been going through this now for over a year on this discussion. But clearly there's 23% of nodes are running with knots. There's a pretty strong vocal opinion out there with people voting with moving to knots nodes that doesn't want Bitcoin to have the JPEGs. I think you got to respect that 23, 25%. I think the core devs need to find a middle ground. And look, I'm sure you got people listening to this that are core devs that are bitching at me on that comment, but and vice versa. But the point is, go figure it out. Like, find a middle ground, find what makes sense, but in general, don't mess around with layer one too much. It needs to be pristine. We got to have other layers, meta protocols or layer two type solutions that then can check back into the Bitcoin network every 10 minutes for security reasons to codify itself. I think that's ultimately where we will end up in this space. But anyhow, I'll pause there. I mean, the only good news is it's not a consensus change. But I respect the people on the not side that are very pissed off and feel like they need to be outspoken critics of core dev, and that's all fair debate. It's healthy. I guess I'd ask the core dev guys to say, look, what other, pay attention to that. That's not just like 2% of people are unhappy with this. It's like, it's a pretty big vote. That Knots node movement is growing. You got to respect that if you're core dev. And I think they need to think hard about what are some middle grounds. And to me, I think Adam Back has thought about this, that one of them, I don't want to speak for him, by the way, but I think I follow him on Twitter, and he was on one of these calls that was on that, there's got to be some middle ground. And maybe it's too big of an increase, perhaps from 80 bytes to 100,000 bytes that core devs are talking about. Like, find something that's a little bit more conservative than that, maybe to appease and find middle ground. I think that I kind of stand with him a little bit. Again, I don't want to speak for his total thesis on it, but what I hear Adam saying is middle ground as well in his unique engineering way. I don't have the technical savvy for that, but I think that, I think we got to find middle grounds.
Yeah, and it's I agree, and I think that the thing I have the biggest issue with is, like you said, it's what are the incentives, and like you said, why are we not debating this at why are we getting into ad hominem attacks, and why are we doing straw mans, and why are we doing those are the things that put up my red flag, because most newsflash, 99% of the world isn't technical. Right. So Bitcoin's never going to work if that's the standard of like, oh, you can only use Bitcoin and have a say or in the system if you only know how to be a super coder. Well, then that's never going to work then, because most people don't even know the monetary system we're in, let alone like they got to learn like how to so a lot of it to me is just, why are we acting like this is like the 2020 debate all over again with the medicine that was being jabbed in everybody? Like, why are we just gaslighting people and not debating and just, saying, hey, these people are idiots if they don't do it? That puts up my red flag. That's where I start saying, whoa. That's because again, if truth is truth and it really needs to be that way, then we can have that conversation. Let's debate and talk about that instead of just saying, well, you're an idiot, you're not technical, you don't get it, you don't understand. Because like, again, the libertarian guy in me, anarchist, all those different things, conservative, all these things I've been over the years is like, yeah, let the free market play out and this, that, and other thing. But at the end of the day, there's also guys out there with their toes in the scale. Genghis Khan was a guy with his toe in the scale. He was a free market. Was that a good thing? Like, I don't know. Like that's, so then you get into Jason Lowery's software. I know a lot of people believe that versus praxeology, and like, well, the free market's just going to decide over here, praxeology or Austrian economics versus, well, software, power theory of, well, I'm Genghis Khan, I'm just bigger and better than you, I'm taking you out. That's also the free market. So like, what's right, what's not, we need to have those debates. And that's the thing that scares me the most out of anything.
Yeah. And I like to think that a lot of Bitcoiners have that middle ground libertarian freedom mindset, and we should take note of our societal happenings like Charlie Kirk and killing someone because you don't agree with them. And again, we could get into all the conspiracies and all that, but
right.
But just this oversimplifying it, like, no one should die for their views. You should be entitled to whatever view you have, whether it's far left and I don't agree with it perhaps, or a far right, someone that I don't agree with because I'm more libertarian. I think you just got to respect different opinions. And I think Bitcoin's crowd needs to even see that. Like, I would hope that the Knots crowd would reflect on the fact that there should be some concern. Is that wrong for them to filter? Like, why shouldn't it be freedom? Like, let's get back to that first principle. How much of it's freedom, the Satoshi, versus how much of it was a monetary network? And again, I think both sides need to be weighed. I think they really do. And therefore, to me, like everything in life, it's gray and you got to find middle ground. And maybe the right solution is to take it up from 80 bytes to some other number, but not 100,000. We could debate this. I'd need to have technical input before I make a firm conclusion on that. I mean, I think we're all kind of judge and jury, most of us in the Bitcoin space, trying to understand this. I mean, I heard some really smart technical guys on the call I was on that are very famous in the Bitcoin space even say, "Hey, I'm trying to learn this view of knots versus core dev." These are highly technical people.
Right.
We're all trying to figure it out, and
Yes.
so find middle ground. And I think
Yeah.
that, again, our society is going to need to do that. It's just the reality. It's always been the reality.
Yeah, and like you said, character assassination or actual assassination is not the right answer. We can't go down those roads. We have to be able to talk and debate instead of just reverting to name calling. And that's when the red flags go up. That's when it's like, whoa. If you have the truth on your side, you shouldn't need to revert to that. And that's what makes me, we just saw it 5 years ago, and that's what starts giving me alarm bells and the spidey sense. You don't need to be technical to understand that. It's just your human intuition, which we all have. And that's what we need to use here. So yeah, it's absolutely fascinating. I would love for you to tell people just for a minute about Bitcoin Opportunity Fund, just anything else you want to share about that, where people can find you. And then also Camp Nakamoto. I'm excited to see you there because we'll both be speaking at that in a month from now, I guess. So I'd love for you to share on that.
Yep. Looking forward to Camp Nakamoto in October up in New Hampshire, and looking forward to seeing you for sure. And BitcoinOpportunity.fund is our website. James Lavish and I co-manage the Bitcoin Opportunity Fund. We invest in public and private businesses in the Bitcoin space, including Bitcoin itself and things like Bitcoin treasury strategies, things like that. Also do some venture capital investments in the space. And so we're very excited about it based on everything we've talked about today, of where it's growing and the opportunities that are out there. And we're trying to be cognizant and careful of how we allocate capital between private and public, and because things can take longer to develop in the venture side of this business, kind of like the internet. It took time for a lot of the great internet businesses to develop when you were investing them in '96. It could take over 10 years to play out. So we're always mindful of that, and that's how we're trying to generate returns for our investors in the space. And if you want to learn more about it, again, BitcoinOpportunity.fund, you can just put your info there, and we'll get in touch.
Amazing stuff, David. Just appreciate you joining us here today and sharing all your wisdom. You're always a wealth of knowledge. I love talking to you, and I know that people love hearing from you. So thank you so much. Appreciate you.
I love talking to you, Brandon, and always enjoying. I'm looking forward to seeing you in a couple of weeks, and thank you for having me.
If you like that episode, then you're going to love the playlist we put together for you with our most recent podcast with the top Bitcoiners, sound money, liberty advocates in the world. Go check those out here. We'll see you inside. You're going to love them.